Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 297 for April 12th, 2021. We are recording this live at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today I have arranged for Michael Filighera, Anka Metcalf, and Fausto Pugliese to join us again. And the option professor will be moderating. So I'm going to go ahead and turn it over to him.
Okay, great. Welcome, everybody. And it's a great show we're going to have here today. Last week, obviously, a big blowout week to the upside. This week, we've got all the bank earnings coming in. So it's going to be a very exciting time. And everyone on the panel here clearly has a lot of experience and knowledge in the markets. So they're going to share with us what they think is going on now and what we can look forward to. Let's start with basic introductions so everybody knows who everybody is. We're going to start out with Michael Filighera of TradersHelpingTraders.com. Michael, a little background on yourself and what's going on at your company briefly.
Okay. I'm Michael Filighera. I am with LogicalSignals.com, which is my website, but we're incorporating that into a larger website, and that is TradersHelpingTraders.com. I have been trading in the market since 1979. I have traded around the globe, well, basically between the US and Europe. And now I'm back in San Francisco and I day trade. And I'm going to leave it right there for right now.
Okay, sounds good. And at the end of the broadcast, obviously, people be told how to get a hold of you for additional information. Let's turn over to Anka Metcalf. Anka, Trade Out Loud. Everybody is kind of familiar with that, but there are some that aren't. So for those, a little background, Anka, and what's going on at Trading Out Loud. Trade Out Loud.
Hi, Jim.
Hi.
Thank you for having me today.
Sure.
I want to say hi to all the guests and all the attendees today. So my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. It's a company that was founded back in 2010. We have been around for 11 years. I have been a professional independent trader focused on equities and futures for the last 18 years, but I do come with 10 plus years in investment banking. And Trade Out Loud is the company that is focused on educating individuals how to day trade and swing trade in the futures and the equities market. And this is something that I do every single day. I day trade futures and I swing trade futures and stocks.
Okay, batting cleanup here is Fausto Pugliese, Cyber Trading University. Anybody who's been to any of the money shows certainly has seen him at those. And of course, he's been helping investors for a lot of years with trading. So a little quick background, Fausto, for the people who are not familiar and what's happening over at Cyber Trading.
Sure. Thanks for having me again. Yes, my name is Fausto Pugliese. I'm author and founder of Cyber Trading University. My book is How to Beat Market Makers at Their Own Game. Basically one of the original day traders that started back in the early 90s. Our main thing that we focus on is we use, I'm a day trader, specifically day trade about 90%, 10% about do more swing trading. And I focus on more of level 3 and level 4, where we get to see and follow the market makers and institutions and high frequency trades. I just showed all the algorithms of what they're in and out, and kind of run a professional trading room that runs all day. I'm live on YouTube and Facebook every morning at 9 a.m. and at 2:30. I pre-market and after-market trading. So like everybody else, with today's what's happening, everything in the world, it's been a pretty lucrative year. And as much as people say, you know what, I want to get rid of 2020, give me another one, because it was a very profitable year for traders.
Oh yeah, absolutely. All right, well, let's start out with the basic question that we do each Monday, and that is the S&P opened up today at 4124 on the SPX. And where do you think it's going between now and Friday? Michael, take a stab at that.
I sure do. I believe higher, and I am going to give that a 70% probability.
Okay. Anka, how do you feel between now and Friday, and what's your confidence level, I guess, was what we call it? Yeah.
I agree with Michael, 70 to 75% higher. We go into Friday.
Okay. And Fausto?
Yeah, I feel the same way. Probably even a little bit, probably a little bit lower, maybe more in the 65%, 60%, because I'm a little So, as a day trader, you never trust what's going to happen.
Yeah.
Every day there's always something that changes things around. But the way it's been trending on the chart, it looks pretty good. Looks higher, but I'm always have my finger on the sell button just in case.
Yeah, the Achilles heel was obviously we all are expecting very good blowout earnings by the banks, and if they were tempered in any way, shape, or form, the market is not prepared for that at all.
Exactly.
Yeah, but that's not really the way the flow of the river's going. So obviously that's a contrarian view. With regards to technical, fundamental, just things that you are following that is affecting your view on where the market is like right now, but also where you think it might be going. What's behind the curtain as far as your thinking on what's happening right now, Michael?
The reason that I am saying higher is that those that have followed me or know me know that I do Elliott wave theory. And I have gone back and I've taken a secondary look at the S&P, but I've gone up to the big picture. And the big picture just shows me that we are really finishing a very large rally phase or advance. And that started quite a while ago. And so what I'm looking for is for the completion of this very large first primary and then cycle level move. And so I am looking for, and I'm off the daily chart, within this final 5 intermediate waves higher, we're in that 5th wave, but it's extending, which it should. So I'm looking for a small top at above 4,100, which we already are, but like at 4,175. But that zone is actually like 4,150 up to 4,175-ish. And then we'll get another pullback. I'm not expecting it to fall off a cliff by any means, although as a day trader, as Fausto said, it may feel like it's falling off that cliff, but I don't think that will last. And then we'll have an additional push. And that's the one I think that takes us up to 4,300 and above.
Yeah. Tom Lee over there at Fundstrat was saying he thought it could rally to 4,200 by the end of the month. And the year after the VIX calms down has got a very high percentage that the following year, the market is up on average about 23%, which would take us to 4,500 on the S&P sometime this year. So those are two good statistics that are interesting to keep there. Anka, how do you feel about, what's behind the curtain here, and a little bit more on what you think is going to happen near term and a little bit longer term?
Okay, so first of all, I think that the S&P 500 has reached an extension level. So from the February 2020 high and into the lows of pandemic lows, we do have a target level here that is pretty much achieved. So we're running into the 161.8 fib level, which is into the 4137, 4130 to 4137 area. And we're trading right into that area right now. I have to agree with Michael, and it is, you could see it with the naked eye that we have had a tremendous run to the upside, starting with the end of March. So we have been very bullish since then on the daily charts, and also onto the weekly charts. We just kept on triggering higher, 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 higher. However, I think that this week is going to be extremely difficult from 2 points of view. First, of course, we do have earnings season that is kicking in midweek, and we're going to see probably fundamentals kick in. We're going to pay attention into earnings and how these financials are going to report earnings. And obviously, if they're going to disappoint, I think that will be reason enough for the S&P 500 to start pulling back. Now, the S&P 500 is also not only financial rich, but it's also oil rich. And although oil has been sideways for a very long time, I think it's waiting for a little bit of participation. If financials are going to have disappointing earnings this week and perhaps going into next week, which, like you said, it's not expected, but everything is unexpected in the market. And if we are starting to weaken into the oil market as well, I think that is going to be reason enough for the S&P to start pulling back, because it's really trading into a really high target. So I really think that as we're looking into the market moving forward, yes, we are going to see it probably chop up. The other reason why I'm thinking that the market may remain flat to a little bit, let's say, higher into the end of the week, is because we're trading into the option expiration week. Typically, what I'm seeing into the option expiration week, if we're going to have a repeat of February, we're going to have a repeat of March, the market is relatively sideways Monday, Tuesday, Wednesday. It becomes a little bit more volatile on Thursday, and this will coincide with the fundamentals that we're receiving from the financial side. And then on Friday, we could have a shakeout and a potential rotation that can take the price higher.
Sure. Well, crude oil's steady here today, but it has come off the highs quite a little bit anyway. I did notice the transports made a brand new high, hit 15,000. So certainly people are still betting on the moving of products and services. Fausto, some people like Larry Williams, and Tom McClellan, some of these old timers, they were thinking that somewhere around the middle of this month, we could hit a pause to refresh. And even in January, Tom Lee was saying that between the end of January and into April could be a time frame where we hit some kind of a peak, and then we could get a little bit of a pullback. Any scenario where you would say that could happen, or what do you think?
I have a lot of friends of mine that are traders. Where I live, I mean, some of them big traders live even across the street from me, and they all feel very nervous about May. You got this big $1 trillion package that's looking to come out. That's going to be a good sugar rush, but eventually it's going to, that only lasts so long. Banks are doing great. Houses are going off the roof, being sold everywhere, breaking record highs.
Yeah.
Well, I know the banks are doing phenomenal on that. They got this PPP loan. People are filling those things out like left and right. I mean, so the banks are busy. So, I mean, unless there's somebody not saying something about the banks that we don't know about, I can't see anything going wrong. I've been following Bank of America. It's breaking all-time highs,
right?
All of them, Citibank and all of them. But May, I don't know why everybody keeps bringing up this May thing, but I agree with them. That's the only thing I'm nervous. Like, we're talking with the S&P, where we're going to be at the end of the week, but I don't know. A lot of people are starting to, are starting. I know a few people that are doing some option calls, and putting some puts out there on some Mays, on some May orders. So we'll see what happens then. I don't know what May has to do about it, but I'd be really cautious on the long-term effect of that.
Yeah, I had noticed the VIX is trading at a significant premium in the June-July timeframe versus the spot. So there is some betting going on that we are entering into a situation where a correction could happen, right?
And that's a good thing. It's not a bad thing. Everybody looks at it. It's healthy when you get something backing off, because what happens, it scares all the short-term money, and then the people that are there that support it, that's what causes these rallies that go up. So, I don't like things that keep going up and up, because it's like when we day trade, when we day trade, we're always looking, we see these stocks go up, and I'm like, okay, when's this thing going to back off so I could buy it back, and you're looking for things that are making higher highs, not higher lows. And, as of right now, we haven't got any, higher lows yet.
Yeah, exactly. So what markets, Michael, are you looking at where you think there could be some of the best opportunities here, near term and longer term?
Wow. First, I totally agree with what Fausto is saying, that the market does seem to just keep going up, keep going up, keep going up. And so a pullback would be extremely healthy for the markets, and then just set the stage for another blast higher. One of my favorite long-term investment vehicles remains gold. And I'm short-term bearish on gold, long-term very bullish on gold.
So you're thinking more later in the summer into the fall type thing?
It could happen quicker than that, but yes. Yeah, I wouldn't go too far out with what I think. I think that the market just needs to continue this pullback that is recent, that basically started last week and now is following through this week. But unfortunately, I do think that we can drop probably probably $90 to $100 from here. And I'm just going to give myself a little pop here, because if you hang out after we're done here, I'll be going into much more detail.
Now, Anka, what do you have any specific sectors you like? Somebody was telling me the biotech sector is kind of dead right now, and it could be ready to go. BOTZ, BOTZ, or ARKG, or something like that. Do you see anything happening in that, or is there other sectors you're more keen on right now?
I'm not really into biotechs. I really try to stay away from biotechs. They are extremely volatile for swings for long-term trades, and
Right.
they're a little bit more on the riskier side. But I have mentioned actually on our public Twitter feed a lot, and I done a lot of analysis, mentioning that NASDAQ stocks. I think it's their turn to start rocking and rolling, because we had a relatively a flat month of March, and it was normal because we don't have any seasonality into NASDAQ during the month of March. And everybody that would have expected, for example, trades to start exploding into March, like at Apple and Amazon, or Nvidia, or
Right.
etc., that's not going to happen. So it has not happened, because this is not the seasonal time for these particular names. But as we stepped into April, we got really heavy into Nvidia. We got heavy into Apple. In fact, in Apple, we did have a position from earlier. We did call Amazon, and Amazon already achieved target 1 for us. And we called it at just below 3,200, and it just ripped to 3,300. And even right now it's trading higher, 33.88. So we are looking, so we're focused a lot on these NASDAQ stocks. We did have a lot of advanced action into Dow stocks. And the Dow stocks right now are just basically waiting for earnings season, because they're going to be actually the first ones that will start reporting, the financials, etc. But I still think that, if you have missed some of these moves last week into tax, into the tech sector,
Right.
it's a shame. Yeah, it's a shame, because they're rocking and rolling right now. So Microsoft helped as well. So I would look for any kind of pullback into these names for a continuation higher. So for example, Microsoft, after the massive break that you show there, over that 240 level, is just extending higher. Plus with the news, with the acquisition of Nuon, is just blasting higher. It's not like it used to be back in the day, because Jim, if you remember, when a stock would propose, or be in rumors of acquiring, or even after the purchase of another company, that stock that is buying that company out would go lower, right? Not anymore. Everybody sees this as positive. And because we have so many retail traders and algorithms that are so 100% technical on everything, that's why we're having to push to the upside. But again, Nvidia is another name for higher. For example, Netflix, after a 3-day consolidation, and Netflix, so Nvidia, look at Nvidia, beautiful, looks like it wants to extend to the 620s. And then another beautiful name, Netflix, which has been consolidating for the last 3 days into this highs, into the daily charts. And it's ready to explode over 560. So 560, you see it right there. After it takes out that high, we're looking for a next target into 570s, 580s, and going higher into the 600s. So everything is very, very, very bullish at this point into even Cisco, but Cisco has been basing, for a very long time, and got a little bit carried away and extended a little bit higher. So right now we have the 20 SMA that is trying to catch up with the price. So I like this consolidation that is happening. This may be the next breakout that we may be looking in the market, if that is, literally going to happen. But the tech stocks were really big on my radar last week. and we hit them really, really strong. Another stock is race, and that's Ferrari. I see a lot of Ferraris where I live here, and I'm seeing more and more Ferraris. And this look at that beautiful breakout. This is also a trade that we have initiated last week,
Yeah.
and it's again another breakout right now. And
Yeah.
same with PayPal. I mean, from this standpoint, I think PayPal, Square, these are longer term trades that you could actually hold into your portfolio. These are looking really, really, really strong as they're, continuing, but they look good. They look good for higher and extending higher, at least into the 275 to 280 level. Target is also another name that is very strong. So all of these names are on our radar. We actually took some profits from, Target. There's Target right there, consolidating into the highs. I think that, it still looks strong, but the fact that it's topping out a little bit there from the prior breakout, but you see a similar pattern. So we did have that little range bound action right into the prior pivot high from the beginning of the year, from January, and we're consolidating there. So what the price action is showing me is that it's consolidating, is chewing up all that resistance that it had to the left-hand side, and it's trying to start engaging higher. So I really, really like it for higher. So yeah, NASDAQ stocks are going to be my focus for April.
Yeah, I think to sum it up, in Q1, they all got tagged pretty good because the rate started to really accelerate. We went towards 250 on the 30-year. We went to 180 on the 10-year. When those levels could not hold, and now we have faded back down, and they're very well behaved right now, then I think you got the buy signal to come back into these areas that you're talking about. So if the bond market is not going to do any imploding, particularly at the speed it did in Q1, then people are feeling more confident to come into these stocks you've mentioned, and the charts speak for themselves. In Q1, most of the stuff you talked about got whacked. And why did they get whacked? Because the rates were going nutty on the upside. But since the Q1 ended, the rates are very behaved underneath their highs that they hit in Q1. And now people are rotating into the stocks that got nailed in Q1. And that's why you're trying to participate in those, right?
Yes.
Yeah.
Yes.
Fausto, do you see that as a scenario where, the stuff that got whacked in Q1 is now where you want to be in Q2?
Not really. We're
You don't
really
trust it.
looking,
You don't trust it.
as a day trader, it varies on different industries. What we're looking at, like I know Michael's bringing up gold, and I got some old timers always asking me, should I buy more gold coins? I mean, I'm still holding on my gold and my silver, and I held it for a huge crush, when it came down from 2,000 down to 1,100. So I'm making it back. I know Anka doesn't like the biotechs, but yeah, I'm a fan of hers when it comes to talking about Ferrari. When that company went public, I wish I didn't. The bad thing about a day trader is you always sell sooner than you want to, but it makes you more conservative than usual. But
the idea is to get the risk off the table. That's the whole idea of day trading.
Always looking to take a profit. That's what it is. Always because we know we've been there, and I guess that's why we're around for so long, is because we're not being greedy when it comes to that. But the two big things I'm really worried about that we're keeping an eye on, two industries, there's two of them right now. First of all the pot stocks, they're getting crushed. Okay. New York's just passed a bunch of, laws. They're going to now legalize pot over here. You would think like stocks like TLRY and actually CAN, CAN's getting crushed today. It's down like $5. So, these stocks had huge runs up going into January. TLRY was down to like $8, ran to about almost, was that 70, and now it's right back down to 17. So they just broke some major support levels. So we're looking at some, maybe on the shorting side on some of these. And then the big thing we're really focused on, the number one thing is Bitcoin. So we all know what's going on in Bitcoin right now. So the big thing that we're looking at right now is you could see Mara, MARA, is doing very well. You could see Riot, RIOT, is doing very well. But what's really going to put a staple in this whole thing is Wednesday. Wednesday is a new IPO coming out called Coinbase. It's the largest cryptocurrency ESP for the U.S. clients. Now, this company right here basically reports 56 million users, 335 billion in trading volume. That's about 1.8 billion in revenue just in the first quarter. So that company, this thing is a beast. When this company's I want to see what that's going to do when it comes out on Wednesday.
What's the symbol going to be? Do you know?
Coin, COIN.
Oh, COIN. Okay, sure.
Yeah. So that is really going to make a big attention, and for every that we're going to focus on. And you got to remember that, and like all of us here, we all know you can't always look at one specific stock because it's, like you just mentioned, it's an industry. If you miss one, it's going to trickle down to other ones. So, like when you're talking pot stocks, I mean, TRLY is like was always the staple of it, but there are other ones that will follow along beneath it. If it's electric cars, everyone's always looking at Tesla, but there's Fisker, there's NIO, there's a bunch of them. But
Right.
The big news in right now is what the hell's going on with Bitcoin. They're saying there's a shortage now, so there's no better time when this company goes public, and that could trickle down to other big rallies in these other stocks.
Yeah, the year after halving is always a good year. Now, like I say, the way they do the math, it looks like anywhere between 120,000 and 160,000 could easily occur this year. Do you use these grayscale guys, GBTC or Ethereum, ETHE as proxies, or how do you play it that way?
Ethereum is actually a pretty good play. I mean, it's like it was at the second biggest one next to crypto, next to Bitcoin.
Yeah.
But I don't know. It's always what everyone's always looking at. They don't really talk about that much, but you can, weed into those. You can see if they follow along. But it's, I don't know. The big elephant in the room is obviously Bitcoin. So.
Now, when you're doing your the day trading, because people like more information on your process, some people go into these dark pools or whatever that is, and then they also sometimes are going into obviously unusual activity of volume, et cetera. How are you trying to find out where there could be some momentum that you can jump on a train that's going someplace? Which essentially what you're trying to do with day trading is jump on a train that's going someplace, right?
Well, listen, I was a market maker, so I used to do dark pools all the time. And I don't
Right.
think people really should worry about that as much. What you should be worried about more than anything is the high frequency trades and all the algorithms that are out there, which is something that where I focus my attention using, more level 3 and level 4, which blows even level 3 away, which most people are just using level 2. So this is basically the
Can you
data.
explain that real quick to the uninitiated? Level 2, level 3, level 4?
Well, level 1, just very briefly, is just the bid and ask, right?
Okay.
When you want to quote, that's the bid and offer. You get that anywhere. Level 2 has been outdated since the 90s. Basically, it's where you get to see the best bid, the best offer of a brokerage firm and an exchange, New York, NASDAQ. Level 3, on the other hand, is showing you, you can actually see it on my website. I was featured at the NASDAQ exchange talking about NASDAQ Total View, where you could see all the orders on that exchange, and like in an ECN. Level 4 is an aggregated version of all the ECNs of all the orders out there. So you might see something, if you're focused on just one ECN, one exchange. Well, like NASDAQ, there could be a big order on the New York Stock Exchange and you won't see those orders. So it's something that it's probably like 95% of how we just distinguish our.
You're trying to look to where the order flow is and what's going on the order flow. And
That's
then
it.
by level 4 gives you the widest lens.
The widest lens and more of a algorithm, we all merged all together so you could see all the orders. Because remember, it's all about supply and demand. So
right.
Most people don't realize it. When they start implementing this indicator, that indicator, just something, just follow the money, just makes it a little bit easier. So I don't really focus more on the past. I focus on the future, and the futures of the orders. So
I hear you. And that's good information. It's not that easily accessible to everybody. So that's why they can come to you and at least use that data and information to whatever end they want to use it.
Well, it's easy to get. Don't misconstrue. People think can't get it. It's just they don't know where to look.
But I'm trying to say, the average guy who's just getting into this thing and trying to figure out everything and whatever.
Yep.
I wouldn't say the majority of Americans know where to get level 4 information. That's my point. That's my point.
No problem showing to them. And you know what? They should understand what it is, because then they'll open up a whole new way of looking at it, and they'll probably get more involved into trading than anything, because they'll see it's not as complicated as people make it to be.
It's like balance sheets. They're not secret documents, but how many people have read one?
Not that many. You're right.
So there you go. Same idea. Okay, Michael, outside of the gold, are there any other commodities that you're kind of looking at? We've seen, the grains are, pretty elevated, and we've got the soft commodities that had good runs. Now they pulled back. Anything you're seeing in any of
Yes.
the? Yeah.
I actually used to write and follow most of the commodity markets, and I listened very intently. I can't remember. I think it was last week on one of the shows that you were speaking with someone about the grains and the other markets. And Carly, you were speaking with Carly Gardner.
Yeah. Who
And I
specializes
thought
in
what
that,
she
yeah.
said was brilliant in the fact that I think that there's too much seasonality at play here. And when you're talking about like the grains or even sugar and coffee and cocoa, there's strong seasonality that goes along with those markets. And so before I would enter any of them, even with an options position, I think you need to really double down and check to see how these markets are more seasonal and where those cycles up and down fall within the seasonality charts. And I think that would be very beneficial. And also, as we start to move more into the Southern Hemisphere doing their harvesting, we have the Northern Hemisphere, which has just got everything all planted. And now we got to see what those reports are going to show. And that will be big on supporting whether soybeans holds above current levels or drops back down, and how quickly that will happen. Also with wheat, also with corn. And we're already seeing some of that come into play. And so, again, weather has an effect. The size of the crop has an effect. The projected size of crops has a big effect. And so I think we need to follow that. And also, one of the big things to remember in commodity markets, good news in a commodity is not necessarily good news for price.
Right. Hey, Anka, as far as the reopening trade, I mean, have we come pretty darn far on some of this? I'm looking at like Avis Rent-A-Car, the 52-week low is 9 and it went to 77 or something. Looking at Red Rock casinos, they used to be 7, now they've gone to as high as 36 almost. Some of the hotels, obviously the cruise lines, I think you're down in Florida. You guys are trying to sue to get onto those
Yeah.
get those condo commandos out of their condos and back on the boat. But Carnival Cruise has gone from $10 to $30. So I mean, is this reopening trade a never-ending story, or have they discounted a little bit of this stuff and maybe there's not as much action on the upside as people think?
Well, I'm just an observer, so I have had some casinos on my watch, like LVS and MGM and Wynn. And to be honest, last week they looked like a little bit firmer. So if you look at a chart of LVS on the weekly, it triggered last week and it went a little bit higher, but then it stalled. And by the end of the week, it came back down and it's back into the support level. So it seems that 60 is that shelf for it. It's still not going anywhere. So I think that, we still have to wait a little bit. And I like to play mostly technical analysis. So if the technicals are right, then, the news will follow. So it's kind of like reading in between, reading the fine print. But I don't think they're ready yet. So as far as casinos, cruise liners, same with airlines. So today, not a good day for cruise liners as they're coming in. So I think they're just presenting their sideways price action. They're ready for some action, but it's still not there yet. They're still uptrending weekly charts into CCL, for example, from the low that we had, the pandemic low. We're still trying to hold the $24, $25. I think $25 is a good example for CCL. You can see that your moving average is trying that 20 SMAs, really trying to, kind of like cradle the price, create some kind of a hook and try to push it a little bit higher. But the reality is that, really needs a lot of momentum for it. It needs to break $30 to continue higher. I think there are a lot of other trades that we can focus on. Another thing that I like to focus, especially at the beginning of the quarter, is actually the stocks that have been beat up, because for tax purposes they were sold, and for window dressing effect they were sold into the end of the quarter. And probably now would be a good time kind of like look at these names and start looking for some really solid technicals on them to start picking up and probably scaling in for some swings. But I'm not very excited, to be very honest, about the travel industry just yet. With new lockdowns going on in Europe, I think things are going to be very dicey. So I have a nephew that lives in the UK, in London, and they're trying to get out of their lockdown. But most of the European countries, so I have friends that are in Germany and other countries, and they're still into a very, very strong lockdown, really strict, like also in Spain and in France, they're really into a very, very strict lockdown. I don't think that cruise liners are really going to start, moving that well. There was a lot of tourism from Europe into these let's say Caribbean cruises. I don't think the momentum is ready. And then there's that whole vaccine thing, people, there are a lot of people that are pro, a lot of people that don't want to get the shot. Is there going to be a vaccine passport? I mean, there are so many things there. I know a lot of people that have canceled their cruises just because of that. So I'm not sure that this industry is really ready to trigger yet.
Yeah, that chart is good to tell you, though, that there is a lot of real estate above if it really got back to normal. And
exactly.
So that's why you wouldn't want to be tremendously bearish on Carnival, because again, if things do get back to normal, there's still a lot of real estate to go back to the highs. And I think that's why people are somewhat interested in some of these things. Fausto, I was going to ask you, Fausto, I'm seeing a little bit of a breakdown. They've legalized the sports gambling back east, as you know, and they've legalized the pot. But, along with legalization comes a lot of documentation. In other words, people who gamble in games, maybe they don't want to do much with the social security number and give me your ID and don't forget to do your 1099 at the end of the year or whatever, you know what I mean? So I'm wondering if it's got ahead of itself, because she was mentioning Las Vegas Sands, but that's really now a Macau play because they sold all their stuff here in Vegas. So the point is like I'm seeing a BJK, which is the gaming ETF by Van Eck, kind of looking like it might hit the skids here if it got underneath like 52 and 50. And then I'm looking at MJ, which is the pot stocks, and you just mentioned they look like they're folding their lawn chairs a little bit, aren't they?
It's funny you bring that up. I'm
actually right. One last thing, DraftKings looks like it's definitely giving up some real estate.
What? I sold my DraftKings last week, and it's so funny. Like I live here in New York, so I'm dealing with this every day. So I'm like right in the thick of it. Yes, and I agree with you. I spoken to people in California when they legalized it and selling pot and everything else and how it really worked out. It's a tax grabber, and it didn't work as well as they thought it would.
Right.
It actually backfired a little bit, and that's a story in itself. But the pot stocks, I mean, they didn't really take off. They took off. They had that, there's that rumor, buy a rumor, sell on news. So news is out, and you could see how they went down. And about the gambling stocks, I agree with you. I go to the racetrack, right? I've owned horses, and I don't know if anybody's been to the racetrack before, but if you make X amount of money, they want your social security number. And a lot of people don't like to give that social security number because then they want to tax you on it. And it's a lot. So, I was a big fan of DraftKings. I know Michael Jordan got involved. They signed these big deals and stuff like that. Now they're legalizing a little bit more. But like I said, once you start getting your social security number and they start, catching on what you're doing, unless you're running as a business, some people don't like to do that. So they are taking a little bit of a turn here. DraftKings is testing a major support levels right here. So if it does break it, it's not going to look too good. It looks like it's making lower lows. But like I said, I was a big fan of DraftKings. If you go on my YouTube channel, you see me. I got so many images on it. I was a big fan up until when it was about in the $40, $45 price range. When it kept breaking out, it's just had a really nice run. But, you saw what happened. Penn, Penn did great. You could have bought Penn at $4 during the crash.
Right. And Churchill Downs is another one that was doing great. Yeah.
Yeah, Penn Gaming. Yeah,
Sure.
So you could see it. I mean, you go back, you can see it. I think it was $4 went to 140. So they're at this pivotal point right here. If they break this big support level, they're not. It doesn't look too good. So we'll see how that works.
I just think some of these things have gotten a little bit ahead of themselves because it might be equal to like the market. I mean, the Fed is definitely sticking with this. GDP will calm down, inflation will calm down, because the idea is some things are like horses coming out of a barn. They come out at 100 miles an hour, but then after they go a half a mile or so, they start walking a little bit because they're out of the barn. Same thing with this reopening thing. We could have a quarter or two where everybody goes nuts a little bit, but by the end of the year, the normalization may come back and we may revert back to the mean on GDP and revert back to the mean on inflation. I think that's what the Fed is saying is going to happen. And that's not a tremendously stupid thing to say, I don't think.
And also, and with that said, just everybody know, don't misconstrue, DraftKings and Penn like, Wynn. Wynn did great, made a big comeback, and it's strong. A lot of the casino stocks. So they're on a different league of their own. These are totally different. And you can look at the trends on how they're trading. So they're not almost in the state. They sound like in the same industry, but they're really not. If you just look at how they all trend separately. But yeah, I think the party could be over, and let's see what happens in the next couple of days or even less than a week.
Yeah, and I'm, like I say, the spendings clearly is going to be elevated from where it was, because if you could never go on a holiday and you could never go to a restaurant for a year, obviously you saved a heck of a lot of money if you like to do those kind of things, which I do. And so you have a lot more that you didn't spend, and so you're going to spend some of that, but you're not going to go, on 75 trips. You know what I mean? To play catch up. You know what I mean?
And with that said, like you just mentioned, also like with the gaming stocks we're talking about, I was also very, very big fan of airlines. And like Anka was just mentioning regarding about, the cruise liners and stuff like that. I was a big fan with the cruise liners, but because when you have like terrible news and the thing doesn't go any lower, that's when you buy, unfortunately, catastrophes make opportunities for us day traders and traders. So, I just took my first trip last week after a year and a half being, with COVID and this and that, finally with my family down to Florida and stuff like that.
Sure.
And, you can see the airlines starting to pick up, but they're starting it's starting to cap out. It looks like.
Yeah, and they're going back up towards the bookings that they were at, that kind of thing. I'm wondering if they have enough routes and everything, because a lot of people don't want to travel if you have to stop 3 times to get there or pay $1,200 to get there.
You know what? They're not like $30 flights anymore.
No,
they're not cheap. Look up an airline now. They were cheap a while, like
right.
6 months ago, something like that. Now, like,
I mean, if you want a 4-hour delay in Charlotte, you can go anywhere you want,
Yeah, exactly.
But
with
I don't know if they have. I don't know if there's that much to do in the airport of Charlotte for 4 or 5 hours,
and have your mask on for 4 hours.
Yeah. Hey, Michael, let's get an idea on what Elliott Wave might be indicating, where a high point could be potentially right now in the S&P. Do you have anything that giving you any kind of a
I do.
Type thing? Yeah.
Very, very much so.
Yeah. That's important.
Right now, the market seems to be just completing an internal smaller wave. We're looking for a pullback. I think that it may drift back below 4,000, but not by much. Maybe down to like 39.90. Could go as low as it could go as low as 38.50, but I don't see that right now, unless things start to fall off the cliff, like we've talked about. Upside, I have resistance at 41.75, 42.40, 4,300, and then 44.60, and I can keep going. This rally really pushes, and again, being that we're in earnings season, who knows? There's so many tech stocks in the S&P that if we start to get blowout earnings, as you've talked about, then I think that we basically can start to go to 47.50 and even higher. You know,
I
we,
think
we could be looking.
those numbers on the outliers are going to be if the institutions that are caught a little bit underinvested and sideline cash,
Yeah,
comes in
Yeah.
a big way, because they are definitely in a FOMO mentality. Because
well,
again, if
yes,
that,
and you know what it would resemble pretty much what we saw a few weeks ago,
right,
where suddenly the funds, we were at the end of the first quarter and the funds got stuck. And they pushed tremendous amount of money back into the market. And we saw these huge rallies take over. And that's really kind of what we're still riding on. But so, yes, I agree with you that, if we get down towards the end of the second quarter and these guys are stuck again, boom, it could just fly.
yeah.
So I agree with what we've already been told or what we've heard, like Fausto was talking about it, Anka was talking about it. We may see a decline in May. I mean, there's the old adage, sell in May and go away. It hasn't really worked all that well more recently, but it still could produce a period where everything that we've talked about already comes to a head. It starts to relax. People are now, moving around, whatever they're going to be doing, but the market starts to relax. And the anticipation. Now, I'll tell you one thing that I do have in the back of my mind. Other people may disagree with me, but should that infrastructure package pass, it's going to be paid for by a take back and an increase in corporate tax. Now, what could balance that out is the fact that it's like if corporations are paying more, that they're paying their fair share in taxes, the fact that there'll be more jobs and people will be working, it could balance itself out that we'll continue to buy the products, big tech products, but they're going to have to pay. And so I think that it will have an effect on earnings initially, but that should balance itself out because the economy is going to get a huge boost from all of the new jobs that are going to be hitting the different states. So, but that could be the canary in the coal mine and force a little bit larger of a correction.
Anka, I wanted to ask you a question. My feeling is that by July 4th, the US will be open and running around. My feeling is Europe will be up and running around by Labor Day. And my feeling is by the end of the year, developing markets, EM is going to be running around by the end of the year. So, you know what I mean by running around? You're opening, you're normalizing.
Right.
So
Right.
basically my feeling is that that's why you want to be in the US here all year long so far, because we are the first one opening, and ergo our stock market is going to be the big performer going into July 4th when we actually open. And it could be a buy the rumor like in December and January and sell the fact as we get closer to summer. Now, with regards to Europe, a lot of those companies are their EUFN, which is their financial companies, or VGK, which is a European thing. They're not extended. So should people be looking to put some deals going in Europe, looking for a nice summer there and maybe EM in June for a nice fall there, and kind of get into things that have not had big runs, but have moving averages that are kind of telling you a big run's coming?
I'm not so sure about that, and I'm not so sure about Europe. I mean, they're still stalling. Like I said, some very heavy lockdowns with some very severe,
But this is April.
Yeah, I know it's April, but
And September is a long way from April, and you know what I mean?
Yeah, I don't really have much confidence in Europe, to be very honest. Don't have much confidence in Europe. So
So you're not seeing a lot of opportunity international as this thing reopens, because
no.
our trade deficit is about $90 trillion and it's going through the roof. These guys are getting like 48% jumps in their surplus and their exports, China, Korea, et cetera. So obviously, if you're exporting all this stuff to these people that are spending money like drunken sailors, you're probably going to make some money. So obviously your earnings are going to jump. And when your earnings jump and you have low valuations, you probably got a decent shot of a run.
Yeah, I don't have much confidence in the market in Europe. And as far as tourism goes in Europe, I have family in Europe, and the things that the things that are going on in Europe, they're not good. So they're not.
Well, what you're saying is that you'd rather see a little more evidence of a turn than play crystal ball with a turn. But if you did see a turn, you could see how it could mature out that way.
It could, but yeah, it depends on a lot of things.
Yeah.
I'm a bit more conservative, so I wouldn't really bet on it.
And when you're doing short-term swing trading, obviously the immediate is what you're concerned about and not what's going to happen at Labor Day.
Yes, I think,
So
yeah.
in other words, your approach to the market is one of let's see what's going on today and in the very near future for day and swing trading, and let's not obscure
Well,
ourselves
not
with.
necessarily,
Yeah.
because I am involved, not necessarily. I'm involved in some longer term trades, for example, here in the US, with Airbnb. And this is just one example of the swings, but I'm heavily into the tech for long term. So we have been holding on to Microsoft and Nvidia for a very long time.
Right.
And like I said, I really think that this should be the focus and the tech should be the focus. And it comes into play. I mean, the seasonality is very strong in the tech sector as we're going, especially now. I think that the big hurdle was in March, but whoever had confidence, stayed in. And we're seeing actually some pretty good, decent results. And I'm not saying it's going to go parabolic up, but it's going to go up and down. So as far as the travel industry, like I said, Airbnb is a good investment because once all of the lockdowns are going to be lifted, this is going to really take off. But I don't have a lot of confidence into cruise liners just yet, because a lot of people that were, and I personally know a lot of people that would die for a cruise. I know a lot of people that pulled back and they said, I'm done with cruising. So if they're looking for a second home, they're looking more into real estate, they're looking more into Airbnb. So they're kind of done with cruise liners. And then again, I think the travel air industry is going to suffer here. And there are a lot of things that are going on. We're going to have to see, how everything is going to play out.
I think you're mentioning a pretty interesting stock in Airbnb, because the thing was at 220 and now it's at 178, and it had two pullbacks. One went down to 160 and the second one went down to 170. So you have a higher low on both of those. So if we can hang in this 180, maybe start taking out 185 and then 190, then you're back in the game, huh?
Yeah, exactly. So this is more of a long-term play. So the daily has the topping sign. So it has a top and two lower highs, but it maintains the structure of higher highs yet. So the bottoms are rising a little bit. The weekly, so it's not really, let's say, ready to go higher. So from the weekly standpoint, it looks a little weaker. The price is trading below the 10 EMA. It's almost close to triggering last week's low. So, and that is because the travel industry is still, it's still hit.
Dodgy. Yeah, still dodgy. Hey, Fausto, I wanted to ask you a quick question on the blue, like if the sideline money is going to come in. There's obviously all that big money on the sideline that people are waiting to come in. Would they be more interested in coming into blue chip tech because they figure if I'm going to get stuck with something, I don't mind being stuck with Google, Amazon, Microsoft. If I'm buying at a crappy time, at least those stocks, obviously I can sit with and not look embarrassed. Do you think they'll come into the Coca-Colas and the big name consumer discretionaries?
That's a tough question to answer for me, because I'm more of a short-term trader, and I guess if you're a little bit more conservative, you probably there might be that market of people out there in there. But for me, there's still some screaming buys on certain stocks that got really hammered, and Anka mentioned Airbnb, and getting out of some of the airlines, which I agree with her, because it's eventually people are starting to adapt of just working from home, so they don't need to travel as much. And I don't think people are planning to jump on a plane and wearing a mask all day. And
plus they got debt. They got so much debt, right?
Yeah, that's what's happening. And about Europe, listen, I have family in Italy too, and you know how bad it is over there. So, and I don't think it's getting any better. It's going to take a while for those people to adapt and become open, because once lockdowns are freed up a little bit, they're still going to probably make them wear masks for another year or two. Who knows?
So they're not looking for Positano to get busy and Capri and all the sites and all that stuff. You don't think they're going to have a normal summer? They're not going to have a normal summer, you don't think?
Yeah, I mean, listen, I was looking forward this year. I thought we were probably going to be able to go there. I was going to take my family out there to go to Positano. And I was going to do an Airbnb with and everything. But then it got to a point, it's like, for what? It's a waste of time. You can't do anything. You can't go anywhere. You can't enjoy it. They just locked them down again in Italy. So it's going across all over, even like in France. That's why U.S. is doing so well. And that's why a lot of these people are the U.S. market's doing well, because they're like, we're talking about, with all this infrastructure money come in, but overall, I trade a lot of people up in Canada, and and their markets don't move like ours. That's why I could still see us going a lot higher, as long as we don't have any more catastrophes or any lockdowns here.
Yeah. We're so far ahead on the vaccine thing, which is at the end of the day what this whole story is about. When Europe and emerging markets catch up on the vaccine, that's when their markets will catch up. Because our distribution of the vaccine is like blowing away anybody else.
Well, it's just not even just as regarding about the vaccine, everything. Listen, we got great technology. That's what America is all about. We know how to innovate. Right. That's why everyone leads, but comes to us. Look at China, right? No offense to them, but they copy everything we do because we're great entrepreneurs. We're the greatest entrepreneurs in the world, if you really think about it. We're the ones invented the computer. We're the ones invented the iPhone. We're the ones that did, Facebook. I mean, we're innovators. We're the ones invented the drugs that came out. So
on Taiwan Semiconductor, there's a lot of saber rattling, it seems like, between China and Taiwan. And this thing's peaked out at 142. And it's trading around 120. If there was to be some kind of skirmish, would Taiwan Semi go in the toilet?
Is that for me?
Yeah.
Yeah. Probably. I think so. Yeah,
because I mean, they've made a big hit on the shortage of chips, and so I'm just wondering out loud if there's an opportunity there to keep an eye on us. Today it's down about $3, 2.5%, but it just seems to me like that kind of news. If they got into some kind of skirmish or something like that, you saw what happened to Baba when they decided to whack them.
Baba came back a little bit, though.
And they had the fine came out at 2.8 billion, which was nothing to these guys. And so, and I was noticing Charlie Munger had been through the Daily Journal. Those guys were buying Baba, and so that might have hit its low, right?
Yeah, Baba. I mean, listen, Baba's been going down since October.
Right.
They hit a high,
right.
Kind of build some stability here, but yeah, gapped up pretty nice. It was up 9% now, up $20.
Yeah. You got a pretty high-end guy buying it, and you also got the news behind it. So those are two good factors that might say 225. You're not going to see that for a while.
No, you're not going to see that for a while. And that's what I'm talking about earlier. There were some really good deals out there of stocks that really took a little big hit, and that's obviously one of them.
Yeah. Well, we're at the top of the hour, so we're going to go around the horn real quick. And just briefly, Michael, if you could let people know how to get a hold of you and any kind of special offers you might want to extend.
Sure. Sending me an email at michael@logicalsignals.com. I always answer my emails. Again, the website is tradershelpingtraders.com. There is someone that has actually hijacked that, and so they're putting out their own stuff. It has to do with trading, but mine will be coming in under Eye of the Storm. And I do a daily podcast, and mostly I've been covering just the NASDAQ 100 or the NQ. Today I'm adding the ES, so we're expanding a little bit. So I invite everybody to come in and check that each day. Again, like Fausto, I am a day trader, and so my larger picture does not change, but the daily picture and then the hourly picture can change almost hourly. So always check in with my podcast, and where I go over the charts, I go over the counts, I go over break levels and Fibonacci levels and everything. It's all on there, and it's free.
Okay, sounds great. Anka, again, how to get a hold of you and any special offer you want to extend today?
All right. So if you guys want to get a hold of us, we are tradeoutloud.com. And if you want to email us for more information on one of our services or products, that is info@tradeoutloud.com. And as always, we're offering deals on our services. If you want to check them out, we also have tons of deals on the education. So just feel free to email us at info@tradeoutloud.com. Currently, we're offering, some pretty spectacular bonuses with all our programs. So email us and you'll find out.
Sounds great. And Fausto, again, how to get a hold of you over at Cyber Trading, and also any special offer?
Sure, no problem. You could always reach us at ctu.co. It's a very short version of Cyber Trading University. And I'm live every morning on YouTube and Facebook Live on our YouTube channel, talking about pre-market, looking at what stocks is moving in the morning. I'll cover all the things that we mentioned, the level 3, level 4. We'll look at the orders. I also do a live demonstration every Thursday at 12, an open house. You can always register for that for free. And also, you can come and join our trading room. We run a professional trading room with hundreds of traders that are handpicked, that you can see what they do. Don't look at us, look at them. We don't talk about the winners. We talk about the losers, because that's what everyone's biggest problem is. You got to fix that first. So feel free to take advantage of all those great things that we have to offer. And like I said, the worst thing that could happen, you find out that day trading is not for you, but you'll see it's a lot easier than people make it to be. And if you learn how to trade and you surround yourself with great traders and you learn a little bit from all of us here, you'll get to see and you find a niche that works for you. And like I said, you could enjoy something the rest of your life, but you got to learn before you could earn.
This is a great time to be in the markets, obviously, and it's a great time to learn as much as you can, like Fausto was just saying. So these guys offer a lot of information. You should be definitely taking advantage of it, find out what's going on. There's too much information in this kind of short format for them to really be able to explain what they can do for you. So that's why you got to contact them and get all the facts and see what you can do. Optionprofessor.com is our website, optionprofessor.com. We have a weekly newsletter we hand out. Last week, we talked about Charlie Munger's daily journal picking up the Alibaba. Obviously, that worked out pretty good. And so we keep you informed on everything from stocks, bonds, commodities, whatever. So optionprofessor.com. It's a free newsletter each week. Go there, put your email in, and you're done. Great. Thank you very much, everybody. I think we gave everybody a good show here today, and I'm going to turn it back over to David. Good luck and good trading to everybody out there. And thanks a lot, you guys, for being here today.
Thank you.
All right, thanks everyone. Yeah, just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app, or you can also just go straight to TimingResearch.com to get access to this, the archive of this show as soon as I can get it posted, as well as any of the past shows and events. And I just want to thank my guests again for today, Michael Filighera of LogicalSignals.com and TradersHelpingTraders.com. Also, Anka Metcalf of TradeOutLoud.com, Fausto Pugliese of CyberTradingUniversity.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.